if you use our strategy, you know what to do. If not, just follow our trades and see. Wait for profit, basically. So, position open on Canadian dollar.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. Let's do the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on.
Well, guys, in the meantime, I'm going to move lower Japanese yen. I will put order to sell short at 104.322. Okay, I moved lower. Let's see if I would get filled with this order at this price.
How did this happen?
The reaction video also went viral and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it. Like, who cares? We were like, okay, let's just go crazy at the drop. So that video goes up. I go to sleep, and the next morning, everyone's doing it. Like, next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and, what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
"It's just Taco Bell, what could possibly go wrong?"
to creating something Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I
was here at 1.
I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga.
I want to touch him.
What do you guys think of Joji?
He's hot, That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
I have to cancel order to sell short Japanese yen. As you can see, well, it moved really, really fast to direction I wanted to go, but I didn't have a chance to execute and sell short. So order cancel. We'll wait for better time.
online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there.
First time we came out with B, Jade said, it feels like I've been released from prison.
Do you want these, Mrs.?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's Jade.
Oh.
So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya. When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. I have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a...
Thank you all for joining us. We are here with the CEO of SoftBank Group International. COO, we'll have you with us. Thank you so much for stopping by.
Hi, Emily. It's great to be here. Great to be able to chat in this virtual world.
Yes, indeed. The only hint I had about what we would be talking about is that you were going to be in Miami. So you are joining us from Miami today, where you've just announced that SoftBank is going to invest an additional $100 million in Miami startups and the ecosystem there. Tell us more about why and where this money is going to go.
So I guess most people that are in the tech world have been following the amazing work that Mayor Suarez is doing of showcasing Miami to the tech world, and knowing that Miami is so close to us, so close to SoftBank and so close to myself, we couldn't not be part of it. And we are huge believers that in order to propel a tech hub, you need two things. You need talent, and the amazing thing of this pandemic is that people are free to live wherever they like. And once people have a chance to come and visit Miami once, especially from certain places in the West Coast, then suddenly people love Miami and they want to stay. So there's talent. But usually the second piece is capital. And what we decided to do today is to make, we call it the 100 million SoftBank initiative. And that is basically we all got together within SoftBank and we made a commitment to $100 million to startup companies that are either in Miami or that are moving to Miami. So when you combine talent with capital and with so many people moving to Miami these days, we wanted to make sure that we contribute to Mayor Suarez, who is truly welcoming to see a government official actually embracing tech.
So is this new money, or is this money coming from some of SoftBank's other funds, like the Latin America Fund?
I mean, we will make a decision as the investment come, and we just put a number of 100 million. I mean, it could be much larger due to the fact that we have the Vision Fund, we have the Latin American Fund, we have the Opportunity Fund, and we have SoftBank's balance sheet. But the message that we wanted to send is this is money that's 100% allocated to startups, and we're doing investment that traditionally maybe we wouldn't do, maybe helping more in the startup scene. But I think Miami needs the capital in order to continue to, become more of a tech city, which the major is doing, is trying so hard.
So Miami has been the talk of tech Twitter, at least until a few days ago when it became GameStop. But you've got a number of big name investors that have left San Francisco for Miami. Peter Thiel just bought a house there. What's Miami got on Silicon Valley? Like, convince me.
I mean, all you have to do is come and spend a couple of days here, and you will see, the vibe that this city has, the quality of life that this city has, the difference in taxes that this city has. And I think just a hungrier government that's welcoming the tech ecosystem to say, his favorite words are, how can I help? And traditionally, we're not used to the how can I help from government agencies. So when you have a government that's welcoming you, you have an amazing quality of life, which has become quite important. When the world has moved where we can move around, we don't need to be in one place. We can choose where we want to live. You have capital. You have the brains of Silicon Valley, the brains of New York moving to Miami. The magic starts cooking, and you see so many people. I was just walking through Miami the last couple of days, and I saw so many people that I used to go see in Silicon Valley that I used to go see in Miami. So it's great. Everybody's here. Everybody's putting up ideas, and I think we're into something special. And by the way, Miami has a great soccer. Miami has a great soccer team too.
And I'm sure there's people looking at the blue sky behind you and feeling a little jealous. That said, talk of Miami being a tech hub is kind of just talk right now. Miami attracted less than 1% of all venture dollars invested in the U.S. last year. How much more of that share do you think it can claim?
I mean, everything starts somewhere, right? And what it takes is, again, it takes a government that is willing to make it easier. It takes capital coming, and hopefully today we took a first little step. We say, look, there is dedicated capital. And I met with a lot of venture capitalists and a lot of private equity, and they're all ready to put capital into. And you have a lot of companies that are moving to Miami. So I would say this is the beginning, and everything starts with first baby steps. And I think today we're making baby steps to make sure that Miami will be a player in the tech ecosystem. And also, all of us today have learned how to work remotely, how to work virtually. And a lot of the big tech companies and big companies from the world are telling its employees, look, we understand the concept of a traditional headquarters dead, and the future is going to be a distributed workforce where employees are going to be allowed to live, and work wherever they want. And this is where WeWork suddenly becomes an incredible value proposition for people to be able to use the different WeWorks to show up to work, establish new startups and all that. So I think the world is changing. I think new habits have been developed during this pandemic, and I think that puts Miami in a really good place.
So you're in Miami. I know you also live part of the time in New York. You've got Masayoshi's son in Tokyo. How has this new way of life, or the way of life for the last 9 months, impacted the way that you interact, how you manage and run the companies together?
I think we're a lot more efficient. Definitely, there's no need to fly 20 hours to get to Tokyo to have meetings. Today we communicate virtually. We use Zoom. We use different video applications, and we're able to, I would say, work as efficient, or if not more efficient, in terms of the movement of information. Now, what you do miss is you miss the ability to interact with people, and this is why I think the office will come back, because you miss the innovation, you miss the mentoring, you miss those face-to-face conversations that are special as we develop our plans. However, we haven't. I don't think we missed a bit. We continue to do investment at the same pace that we were doing before. So, I mean, we haven't stopped. As a matter of fact, I think this pandemic has massively accelerated the deployment of these technology companies that otherwise might have taken a little longer. But I think we have accelerated 5 to 10 years of how the world has changed. This technology revolution, as we call it, the AI revolution, was meant to happen, but the pandemic massively accelerated the digitalization of the world.
SoftBank shares, meantime, have been on a tear, recently hit an all-time high. Given that it's moved away from being an operating company to being more of an investment holding company with a lot of different parts, some parts rolling off, like ARM selling to NVIDIA, why do you think it's doing so well?
Because we started to, we put together a plan at the beginning of the year. We shared a plan in terms of we were going to, for the first time, I would say, in company's history, we put a plan to basically monetize some of the non-strategic assets that weren't part of our future, and we decided that we wanted to become an investment company. So the first step was the merger between Sprint and T-Mobile. The second was the monetization that we did of the T-Mobile shares. I think that was the second largest secondary offering in U.S. financial market history. Then we sold ARM. We are selling our energy business. We sold Brightstar. We are continually selling our operating companies, and we have decided that we're going to focus on investing, which is what we want to do. And because of that, we have the Vision Fund 1, we have Vision Fund 2, we have our own balance sheet, we have the Latin American Fund, we have the Opportunity Fund. So we have funds that are investing in what we always said we wanted to do, and that is we're on the verge of, we call it the most advanced revolution in terms of disruption of the way we live, the way we work, and the way we play. And we wanted to make sure that we had sufficient dry powder to take on this new set of opportunities. And, I don't think SoftBank's balance sheet has been, I think they're in the best shape we've ever been. I think we have more liquidity and more dry powder than we've ever have. And in a time where there's going to be great opportunities, I think we're properly positioned to continue to take advantage of these opportunities.
So given that the world seems to be changing dramatically by the day and you have that dry powder, where are we going to see you doubling down aside from Miami?
No, it's the same. I mean, our investment philosophy has not changed at all, right? And that is, we're going to continue to invest in companies that utilize data and artificial intelligence to disrupt traditional business models. We like companies that are making the way we work, the way we live, the way we play, making the world a better place. And that's why, you've seen us make investments on e-commerce or food. We have doubled or tripled down on food delivery. Grocery delivery has massively changed. We're a huge believer in autonomous vehicles. I mean, we're going to see autonomous massively accelerated. We invest on telemedicine. We invest on companies that are technology driven to do this type of video conferences. Fintech is changing the way we move our money. Fitness is being done differently. We're in the midst of an edtech revolution. Real estate is being transacted differently. And media, AI media, such as ByteDance or TikTok, is changing the way we consume. So the whole world is moving, is changing so fast right now. And there are few disruptors, companies that are basically changing the way we live. And those are the companies that we're investing, because those are the companies that we believe are going to be the next winners of the next years and the next decades.
So speaking of disrupting traditional networks, I mean, we can't avoid the biggest story of the moment, which is what's happening with GameStop, what's happened with Robinhood today with respect to that. And I'm curious, do you see what's happening now as a fundamental shift in where power lies, whether it's in institutions or with the people, or is this just a moment of temporary insanity?
It's not. You might call it a moment of temporary insanity, but you cannot run away from reality that because of the pandemic, we have created now millions and millions of people because of the low cost of entry into stock and the low cost of exiting into stock. Now you have a diversified force of, it was 14, 15 million people who are basically trading stock. So you cannot ignore them. I mean, they are one of the driving forces as it relates to acquiring company stocks or future IPOs or future ways in which companies will go public. I mean, you cannot ignore that. it's definitely a new way of investing. However, yes, the madness that we've lived through the GameStop stock or through AMC and all that, I think we need to look at that and we need to learn, how to make sure that that doesn't happen again, because I don't think the stock market was set up to do this sort of speculation. So I think what we've learned from this is there's a very strong group of people that before they were not being considered, and from now on are people that are making markets, and we got to take them seriously and we got to understand it, and there will be a driving force going forward.
Absolutely. I mean, does it have you worried about bubble? I mean, I feel like, I've been covering tech for 10 years and we've been asking that question for 10 years and markets keep going up. At some point, is there a correction?
I mean, there will be corrections for certain companies, but you cannot underestimate how new companies, mainly tech companies, are basically growing at an accelerated space that otherwise they wouldn't, because of the pandemic and because of the digital world that we're living today. So the market is not used to, but I mean, you have I call them these new tech companies that are massively disrupting and transforming traditional business models. So you're going to see those companies grow fast in value because they're disrupting, traditional business models. And the market is valuing because they see the power and they see the potential, the earnings potential that those companies can have in the future. So I don't think that will be adjusted. Now, the craziness that we've lived the last couple of days, sure. I mean, those things that, that doesn't make any sense. A company that doesn't generate those earnings to be valued that long and to drop 150% the following day and go up 70%. No, I don't think the market was set up for that. But, we're living at a moment where tech companies are going to continue to grow and are going to continue to be valued a lot at very high multiples. Also, the cost of money being so low because there's so much money being pumped into the economy, then basically that accelerates these companies reaching profitability, and that's why you start seeing those valuations.
Meantime, you've got the power of big tech, various different big tech platforms being scrutinized for different reasons, whether it's Facebook and Twitter for blocking Trump, or Apple for the App Store, or Amazon. You've got experience dealing with U.S. regulators, with Sprint and T-Mobile. With a new administration, what action do you think that Biden's team should take on big tech? Are you in the camp that some of these companies need to be broken up, or fair play?
I'm in the camp that we need to analyze every situation differently, and we cannot make bold statements that big tech needs to be regulated. I mean, it doesn't happen. You cannot regulate things the same way you could regulate in the past because this information flows all over the world. I just think each case needs to be seen separately. However, I'm a big believer that the least amount of government intervention, the better it is in order for businesses to be able to grow. Because at the end, these businesses, we cannot forget, are the ones that are employing people. And if you look at the largest increase of employment that we've had throughout the world is this gig economy workers. There are different type of workers that we got to learn how to basically integrate them to a traditional working model. But we can never forget of who is creating those jobs directly or indirectly, and be careful with overregulation.
Now, you just had the DoorDash IPO. You've got other IPOs potentially coming this year, like Didi. Given the volatility in the markets, what is your outlook, and what should we be watching for in terms of SoftBank exits?
I mean, I think sometimes you got to look at the past. The Vision Fund, which is a fund that is performing, as we've been very public, the fund is performing, relatively well. As a matter of fact, the fund is doing really good. You have to measure in the past, and you look the amount of IPOs. I think we've had already 12 IPOs in the Vision Fund. And today, there's a lot of our portfolio companies that are constantly being invited to do IPOs or to go public via SPACs. So I think there's a big appetite today for a lot of these tech companies, rather than take one more round of private capital, to basically hit the IPO market via a traditional listing or via a potential SPAC. I mean, and a lot of these companies, I think, will take advantage of those opportunities, because there's great demand from institutional investors or this new breed of retail investors to be able to invest in the big disruptors of this decade and the next decade.
Well, speaking of that, I know you can't speak to the WeWork litigation specifically, but in general, could you see WeWork getting back on the IPO track this year, or perhaps a SPAC?
So WeWork, we have been with the company now for a year, right? It's with my partner Sandeep. He's the CEO. I'm the executive chairman, and we have put together a very clear plan on how to turn around WeWork. And we make it, we've been very bold in saying that we expect WeWork to be profitable towards the end of this year or towards the end of towards the beginning of next year. So the WeWork turnaround is not a matter of if, it's a matter of when. And the pandemic plays a role with that. So once a company it's in the right track to become profitable, sure, we get I don't think there's a week that doesn't go by where we have new investors who want to invest money in WeWork because they're seeing what's going to happen to the world of work after the pandemic. And sure, we have SPACs approaching us, on a weekly basis. I mean, one is we're humbled that is happening because a year ago, nobody wanted to even be associated with WeWork. And the fact that there's a high level of interest from our customers, from realtors, from landlords, from the financial community is something that we're humbled, and that it's a tribute to the amazing workforce of WeWorkers that we have all over the world. Time will tell, what is the right way to monetize WeWork, but right now we're heads down on turning the company around.
And you mentioned the Vision Fund. You say it's doing well. There have been some, high-profile stories, lots of personnel departures. How confident are you in, their performance this year, given that they did have to take some lumps over the last couple of years?
We're in a quiet period, and we'll be announcing results, I think, in the next few days. But what I can tell you is our large bets that we made in the Vision Fund, you can look at them today, and those are the bets that are changing the world. So I would say what I love about MASA, about the Vision Fund, about our company, is our strategy hasn't changed. Pre-pandemic, during the pandemic, and post-pandemic. And I think the world has realized that most of the investment bets that we made are actually working out, and that is reflected in terms that our stock today is trading at an all-time high, which is something at the end the market realizes the potential earnings of the future, the future potential earnings on investments that we have made. And, I love our strategy. I think it's right on in terms of, companies that utilize artificial intelligence to disrupt are companies that are going to win in the future. And, I think time will tell, but I think we're in a very good position.
Now, before we go, Marcelo, I want to ask you about the Opportunity Growth Fund. This $100 million, another $100 million you announced last year you'd be putting into companies led by people of color. What is the progress on that? And what are you learning about how hard it has been for some of these entrepreneurs who may have great ideas and great companies to get in front of the right people?
So I would say that that's one of the most rewarding parts of my job, where one day I saw, I'm Latino, I'm Hispanic, and I founded a very large company called Brightstar. We became the world's largest company in my industry, and God, it was hard to raise money. It didn't matter that we had a successful business. So I experienced it myself, but it's something we don't talk about. And then when the whole Black Lives Matter started getting a lot of publicity, I kept on reading, and people saying, yes, I support the Black community, but people weren't doing anything. And I said, okay, we're going to lead by example, and we're going to put a fund that is solely dedicated to entrepreneurs of color, so they know that if they have a good business, they have a place to go. It's been amazing. We've examined over 700 companies. We've made close to 25 investments. And the quality of these entrepreneurs is as good as any other white entrepreneur that we have invested. But they didn't have a source of capital. And now they have a source of capital. They feel very comfortable. And we're investing. I mean, I don't think there isn't a single week where I don't have an investment committee that we're not making commitments into one or two companies a week. And it's great. And we're going to see some amazing companies because the only thing that we're lacking was capital. And now that we've provided them the opportunity, now they're going to be able to thrive just like any other entrepreneur.
Wonderful. Thank you so much for sharing that with us. And Marcelo, thanks so much for joining us today from Miami. Go enjoy the weather and get back to work. Really appreciate you taking the time. Marcelo Clares, CEO of SoftBank International, COO of SoftBank. We'll have more of the Bloomberg year ahead next.
Okay, I'm placing a stop on profit for Canadian dollar. It will be at 128.09. Just right. No, actually, I will place 128.11. Let's wait until I will place to 128.09. Okay, 128.11. Stop on profit, please.
And we'll track where the barriers are and what's working to help break them down, bringing clarity through data, a core strength of Bloomberg's editorial team.
We're broadening and deepening our commitment with new coverage that explores what's impacting equality and how we live and work, from cultural movements to the influencers shaping tomorrow.
If you care about representation in your company, you should care about how your company is represented in the media.
The huge dollars that are being lost by excluding those people.
I'm optimistic, and I believe that progress is going to win, justice is going to win, equality is going to win.
Hi, everyone. I'm Shartia Brantley, Senior Editor for the Bloomberg Equality Summit in the Americas, and I am excited to discuss the global expansion of our equality coverage with none other than Rakshita Saluja. She is Bloomberg's Executive Editor and Global Head of the Equality Task Force. Welcome, Rakshita.
Thanks so much for having me here, Shartia. It's always great to talk to you, and it's especially great to work with you on equality.
Oh, indeed. Likewise. Before we get started, Rakshita, I just want to step back and set the scene. Bloomberg Live launched the Bloomberg Equality Summit in 2018 after numerous requests from business leaders, advocates, and thought leaders seeking to engage in timely discussions about diversity and inclusion and equality in the workplace through a business lens. Since then, we've hosted events in New York, London, and Mumbai, all while leveraging Bloomberg terminal data. And we've highlighted the Bloomberg Gender Equality Index, which has been around since 2016, as well as the launch of the New Voices program, which started in 2018. But we'll talk more about those a little later. Rakshita, what is your mission as Executive Editor and Head of the Bloomberg Equality Task Force?
Well, like you mentioned, Shartia, Bloomberg News has covered equality and diversity for years now, with extensive reporting around the gender pay gap, the Me Too movement, the impact that these issues had on policy and on companies, and then the workforce changes that followed. You moved to 2020 when protests erupted across the globe after George Floyd was killed, all in the midst of an economic downturn that was driven by the pandemic that further exposed inequities that exist between demographics. And it became clear that as we chronicle capitalism, we must also account for its biggest failings, namely inequality, oppression, and systemic biases. And so the Bloomberg Equality Task Force was created. We are a group of reporters and editors from across the globe and from across Bloomberg News's core news coverage areas of finance, global business, economics, government, and technology. And our mission is really twofold. One is to build on the existing franchise by using a data-driven approach to focus on equality across the core coverage areas that I just mentioned. And two is to elevate equality news and data on the Bloomberg terminal and across our media platforms of Bloomberg.com, Bloomberg Quick Take, Business Week, Bloomberg TV, radio, and of course, Bloomberg Live.
Okay, as you can see, we closed position on Canadian dollar. Just right here. And that's it. We can collect the profit. Look how long it took us. Just 45 minutes to get profit from trade. Speak to you later, guys.
Bloomberg, just how economies and institutions are resetting to foster a more equal recovery. So you take the Federal Reserve, for example, when in 2020, the central bank shifted its policy strategy, pledging to strive towards a broad-based, inclusive employment. Well, we'll find out now what that really means in terms of monetary policy going forward. On a similar vein, on the corporate front, there are changes that are taking place within companies relating to executive moves, boardroom initiatives, product redesigns, and all of these have increasing interest to our terminal subscribers and ESG investors. Let's not forget that this is all happening in the midst of big political change in the United States and in the UK, the incoming Democratic administration in the US and Brexit in Europe, both of which will have ramifications on policy related to inequality and diversity. So clearly the pace of news hasn't slowed down, and if anything, it's been picking up.
Definitely. So how are we leveraging the breadth and depth of our global newsroom to keep our terminal clients and subscribers informed about the most relevant business and investing issues related to diversity, inclusion, and equality?
Well, every country has its own unique experience of racism, gender discrimination, and class struggles. There are some areas where you can compare apples to apples across the world, whether they're within societal structures